Your roadmap to the latest in auto. Welcome to Highway Herald. Today, we're exploring the overlooked challenges in the electric vehicle market. While EVs dominate the headlines, issues like falling lithium prices and automakers scaling back ambitious EV plans suggest the road ahead may not be as smooth as expected. Buckle up as we uncover 7 key reasons why the EV revolution could face serious obstacles. Let's dive in and reveal the hidden truths that could change the future of electric vehicles. Reason number 7. The decline of lithium demand, the end of the lithium rush. The lithium boom that once promised to drive the electric future is quickly losing momentum. Argentina's salt flats, once at the heart of the lithium gold rush, has seen prices plummet by over 80% compared to last year. Why? The demand for electric vehicles isn't growing as quickly as expected. This price drop signals that the market is oversaturated, with automakers scaling back EV production plans. In countries like Chile and Zimbabwe, the fallout is more pronounced. Mining giants, such as Galen Lithium, are reducing targets as demand doesn't meet projections. Even industry giant Rio Tinto acquired Arcadium Lithium for $6.7 billion to adjust to the slowdown. With EV production outpacing demand, smaller mining firms are consolidating to survive. This could push high-cost mining operations to the brink. The future of lithium production is now uncertain. Reason number 6. CATL's struggles with market volatility. Can the battery giant endure? Even the biggest player in the battery game, CATL, is feeling the squeeze of a volatile market. This Chinese company, known for supplying batteries to top automakers, has posted a concerning 12.48% year-over-year revenue drop. While their net income grew by 26%, the mismatch highlights a deeper issue. The EV market isn't immune to financial pressures. Companies like CATL are balancing high production costs with consumer demand that's weaker than expected. A significant blow to CATL's stability is the suspension of their Jiangxi mine, vital for sourcing materials for future batteries. If this operational issue continues, it could delay deliveries of new electric models from automakers relying on CATL's batteries. With rising production costs and slower market growth, even giants like CATL are struggling to stay profitable. How long can they endure in such an unpredictable market? Reason number 5. Scaling back. Automakers adjusting their EV ambitions. The momentum for full electrification of the auto industry is losing steam. Major automakers are recalculating their plans, opting for a more cautious approach due to rising costs and uncertain demand. Electric vehicles remain expensive to produce, especially with fluctuating material prices like lithium, prompting car makers to scale back their all-EV ambitions. BMW CEO Oliver Zipse has questioned the viability of meeting full electrification targets, particularly with Europe's 2035 deadline. He's not alone. Companies like Ford, GM, and Stellantis are also adjusting their plans. They're shifting focus to a mix of hybrid and electric models, recognizing that a purely electric future may be too costly. The push for all EV lineups is hindered by high prices that consumers are unwilling to pay, signaling that the electric revolution may take longer than expected. The dream of an all-electric future is increasingly uncertain. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now let's explore reason number 4. Consumer skepticism. Why the public isn't ready to fully embrace EVs. Despite the hype, consumer skepticism remains a significant barrier to widespread EV adoption. While technology has improved, practical issues still make potential buyers hesitant. The most obvious is the high upfront cost. EVs may be cheaper to maintain over time, but the initial investment is still a tough pill for many to swallow. Range anxiety and limited charging infrastructure further complicate matters. In areas with sparse charging stations, consumers are understandably reluctant to commit. In the US, EVs still account for less than 10% of the market, despite strong pushes from automakers and governments. Surveys show concerns about EV performance in extreme weather, long-term resale value, and reliability. For the EV market to go mainstream, these issues must be addressed. Until automakers and governments tackle the high cost of ownership and improve charging networks, mass market adoption will likely remain a distant dream. Reason number 3. Government policy shifts and reductions in incentives. Why the EV market can't depend on public support. The reduction in government incentives is becoming a major challenge for the EV market. In Germany, for example, after the government scaled back its generous EV subsidies, sales dropped by 37% in just one summer. This sharp decline highlights the market's dependence on policy support. Governments are now reassessing long-term subsidies, with many shifting to more sustainable and balanced approaches. In the US, policy changes have increased uncertainty, with the Environmental Protection Agency, EPA, scaling back its electrification goals. These shifts suggest that the aggressive push for EV adoption may be slowing. As a result, hybrids and alternative technologies may play a larger role in the future, rather than EVs dominating. With government support dwindling, the future of the EV market is becoming more uncertain, leaving manufacturers and consumers to navigate this changing landscape. Reason number 2. Unmet expectations. When EV sales don't live up to the hype. Looking beyond the headlines, the numbers paint a less optimistic picture of the EV market's growth. While sales have increased annually, they haven't met high expectations. In the US, sales growth slowed to just 25% in the second quarter, falling short of projections. This slowdown is most evident in mature markets, where early adopters have already made the switch. The challenge now is convincing a more skeptical mainstream audience to embrace EVs. Projections once suggested EVs would soon capture double-digit market share, but current figures show penetration remains low. These numbers highlight that widespread adoption will be more difficult than anticipated. The gap between industry optimism and consumer behavior reveals the hurdles to EV growth. While the market is expanding, it may not reach the ambitious goals set for the future. Reason number 1. The financial struggles of EV production. Can automakers break even? For many car manufacturers, the financial challenges of producing EVs remain steep. Electric vehicles, especially with current battery technology, are costly to produce. Automakers like Ford have reported billions in losses from their EV ventures, with battery costs accounting for up to a third of an EV's price. This makes scaling production difficult while maintaining profitability. Automakers are stuck between two options: keep EV prices affordable and absorb losses, or price them higher and risk reducing sales. Given these challenges, many manufacturers are re-evaluating large-scale EV production, knowing it could take years to see profits. With these financial pressures, automakers face difficulty finding a sustainable path to mass electrification. This section highlights the tough reality of EV production and explains why reaching the break-even point remains a distant goal for many manufacturers. The verdict: is the EV market really growing or just a temporary surge? After examining everything from shifting policies to financial struggles, one thing is clear: the EV market's growth isn't as unstoppable as it may seem. While electric vehicles are gaining ground, factors like government incentives, battery costs, and fluctuating consumer demand are shaping their future. The reality is nuanced. EV technology holds promise, but the road to widespread adoption is still full of obstacles. Financial and logistical challenges remain significant. For consumers, this means that while EVs may play an important role in transportation's future, they won't be the only solution. A diverse automotive landscape, including hybrids and alternative fuel vehicles, is likely to be a more realistic vision for years to come. Now, we want to hear from you. Do you think the challenges facing the EV market are temporary setbacks, or do they signal deeper long-term issues? Share your thoughts and experiences in the comments. We'd love to hear your take. If you found this video insightful, be sure to subscribe to Highway Herald for the latest vehicle updates and in-depth analyses. Your support helps us bring you the best in automotive content. Thanks for watching and see you next time.